Today we're going to be talking about credit and why, as a mortgage lender, debt negotiation or debt settlement is one of the things that I go, no. Okay, now first of all, if you're new to the channel, I'm a lender licensed in 48 states. All the contact information's in the description. Here's the deal, okay? When people are trying to get their credit up, often there's ads that are going to come up and it's like, let us help you within 90 days, quick, easy, right? We all want an easy solution. And I get it. Guys, I did debt negotiation in my 20s. Yes, that was 100 years ago. And it destroyed my credit for years after. So today we're going to be talking about what that is and why it doesn't benefit you, and why it can actually leave a negative mark on your credit for years to come and make it challenging to get a mortgage immediately after. Now, the first thing is that when you're talking to people who specialize in debt negotiation, they often will be making false promises. They'll be saying, oh, we'll get your credit score to 700 within 90 days. This is what you have to do. And the big thing with debt negotiation is they tell you to stop paying your bills. That's right. They say you need to stop paying your bills because we need to be able to negotiate with them. If you're not paying your bills, they won't want to negotiate. Is that true? Yeah, it is true. But here's the thing. If you're not paying your bills, you're trashing your credit. You're trashing your credit. And as a lender, you know, if someone says, oh, well, I'm going through it right now, but it's all going to be wiped away in a couple months, I'm like, you're hosing yourself for a house right now, because what's going to happen is an underwriter is going to look at your credit report and they're going to go to me, Jen, they haven't paid their bills in the last year. And I'll be like, yeah, but they settled it. And they'll be like, that's not a credit history that's acceptable for lending. So when a lender's looking, we're not just looking at score. Okay, I cannot stress that enough, because people just think it's the score. We're looking at your history, and if your recent history is that you haven't been paying your bills, your recent history is telling us that you're not gonna pay your mortgage, period. And people go, but Jen, it's just so I can negotiate to get out of this debt. Great, but you need to understand that the mortgage company is gonna go, are they gonna do that to us? Okay, that's the basics with any loan program, whether it's FHA, VA, or conventional jumbo. You have to be able to show a positive credit history, which means that you take out debt and you pay it back. Okay, now what happens next is, like, some of these companies will charge off your debt, meaning they just say, okay, we're taking a loss, okay? And then some of them you'll negotiate with. So let's say that you owe $5,000 after not getting paid for 6 months, then they want $2,500. And you're like, great, I'm free, my credit's perfect, I can buy a house. Have you reestablished good credit? That's gonna be the key. The key with this is gonna be, look, if you do something like debt negotiation with all of your credit, you're gonna need, in most cases, a year of rebuilding your credit before you're gonna be able to get a mortgage loan through, okay? Now look, if you had, let's say, 20 cards and one you did debt negotiation on a year ago, but all the other ones were paid on time, could it possibly work? Yeah. But if you have 20 credit cards and they were all late and you did debt negotiation, is that going to work? No, because the underwriter is going to be looking for a re-establishment of credit history. So first of all, here's what I would say. Number one, don't do debt negotiation. Just don't. Like, all you're doing is trashing your credit. You're paying a company for you to trash your credit, and then you're still going to be settling, but you've trashed your credit. And sometimes I hear people are doing this over like $5,000. Now, if you did already do this, or if you're in the process of it, the key is going to be re-establishing good credit, so that when you're looking at a house, we can say, look, there was this isolated period of life where they didn't have enough cash, so they were negotiating with their creditors, but everything's good now, okay? If, for instance, though, let's say you make $200,000 a year and you could have paid those bills, you just didn't want to, and nothing's changed with your income, that's not going to look great to an underwriter. So when you're looking at these things, just make sure that you're going on Reddit, you're reading reviews, you're being very careful, and you're keeping in mind, if you want to buy a house, how is an underwriter going to look at this? Look, if you did debt negotiation, are you doomed forever? No. I mean, guys, I did it in my 20s. I've got great credit now. I've bought multiple houses. You know, it's been really good for decades now. But there was a period of a lot of rebuilding. And if I go back in time, you know, do I wish I had done that? No, no. But I get it, right? When you're in debt, you just want out. It's like suffocating you, and they throw you what you think is a lifeline, and what you don't realize is it's a lifeline, but it's destroying the raft, okay? And ultimately, to get into a house, you're gonna have to be able to show some positive credit history. So if you've done this, guys, make sure you're rebuilding your credit. I would look at other options before you do debt negotiation, and just realize if you're like, well, I want to buy a house and I'm going through debt negotiation, it's not going to work, because an underwriter's not going to say, oh, well, you're not paying those bills and that's okay. We're willing to take the risk. Okay? So look, I hope this video was helpful. Please avoid debt negotiation if you can. There's other options. Make sure you're perusing them. Do budgeting, all that fun stuff, but it will hurt you for a while, especially if you're going to look for a house. Thanks for watching.